TV. I'm your host, Jenny. It's great to have you with us today. So, another busy show. We'll start with Nvidia, which just posted one of the strongest quarters in tech history. Huge revenue growth, strong forward guidance, and yet the stock barely moved. That gap between great numbers and a muted reaction tells us a lot about where expectations are in this AI cycle. Then we turn to Washington, D.C. Donald Trump delivered the longest State of the Union ever, doubling down on tariffs, immigration, and healthcare. We'll break down what he said, what he didn't say, and why it matters for the market. And on the crypto side, Meta is preparing a return to stablecoins, this time through third-party partnerships, while Hong Kong-based RedotPay is reportedly considering a US IPO. We'll also cover the insider trading case involving a MrBeast editor on Kalshi, the growing debate around the 10 a.m. Bitcoin sell-off pattern, and why MicroStrategy right now, or strategy, is now the most shorted large cap stock on Wall Street, even as it keeps buying Bitcoin. So a lot to cover. Let's dive right into the first news of today. So Nvidia just reported one of the strongest quarters in tech history, and the stock, well, kind of muted, barely moved at all. So there's a huge gap between the incredible numbers and the flat stock. This is the story that we're focusing here. So let's break it down. What Nvidia reported, what is the actual number? Let's start with the headlines. Nvidia posted a $68 billion in quarterly revenue. So that's up 73% year over year. It beat earnings estimates by around 6%. And the company guided next quarter revenue to $78 billion, which is more than $5 billion above Wall Street expectations. After the report, the stock moved up around like 1.5% after hours, then it went basically flat. So the question is like, why? First, let's understand how strong this quarter really was. So Nvidia, as we know, the core business is like, of course, like entirely AI. The data sector, the data center segment, which includes AI chips, brought in around $62 billion. So that's 91% of total revenue. It's up 75% from last year and $1.6 billion above expectations. Networking revenue hit $11 billion, more than triple last year, driven by NVLink adoption. Net income nearly doubled to $43 billion. Full year revenue came in at $215 billion, up 65%. So just to put that into perspective, since ChatGPT launched in 2023, Nvidia's data center revenue has grown nearly 13 times. This is dominance at a scale we rarely see. Now, let's talk about what really matters to market. So the forward guidance. Nvidia guided Q1 revenue to $78 billion at midpoint. So that's a 77% growth year over year. Management said the opportunity for Blackwell and Rubin chips now exceeds $500 billion, higher than previously expected. And the CEO, Jensen Huang, said the inflection point for agentic AI is arriving, and Nvidia already shipped Ferro Rubin samples to customers this week. So this is an important detail. Like none of this actually includes any revenue from China, because China so far is still a question mark. Nvidia still, it doesn't know if it will be allowed to ship those advanced AI chips to China. CFO of Nvidia, he openly acknowledged that Chinese competitors are making progress and could really disrupt the global AI market long term. So that's notable. Nvidia used to do $5 billion or more per quarter in China alone. Now guidance assumes to zero. So even with China cut out, Nvidia is still growing at nearly 80%, and that's really something. So again, why didn't the stock move? I mean, kind of flat, right? First reason is that, okay, and most importantly, The market already expected perfection from Nvidia. Prediction markets priced in a 95% chance that Nvidia would beat earnings. Whisper numbers for guidance were already around $75 billion. So when expectations are that high, beating estimates does not surprise the market or does not surprise anyone at all. This exact thing actually happened last November. And the second reason, like there's a deeper issue, Nvidia is now generating over $25 billion per quarter in free cash flow, but its capital spending is only $1 to $2 billion per quarter. So that's another huge gap. In the first 9 months of fiscal 2026, Nvidia returned $37 billion to shareholders through buybacks and dividends. It still has $62 billion left under its buyback authorization. And that dividend, just like 1 cent per share per quarter, some investors are starting to ask, like, what does Nvidia do with all that pile of cash, of money? Michael Berry argued last year that Nvidia's buybacks did not create real shareholder value because they mainly offset stock-based compensation. Analysts now say that as growth eventually slows, cash returns will matter more than revenue growth. That shift is starting now, not later. And here's to a bigger picture of Nvidia. Nvidia sits at the center of a $700 billion hyperscaler capex cycle coming in 2026. So when it comes to like Meta, Microsoft, Amazon, Alphabet, all of them are spending huge money on AI infrastructure, and Nvidia supplies nearly all of that. But Nvidia itself is capital light. It doesn't build data centers. It doesn't run cloud platforms. It just designs chips and software. That's why it has 54% net margins. But it also means cash piles up faster than Nvidia can reinvest that money. When a company growing 73% starts returning tens of billions to shareholders, the market begins asking a new question. Is this still a hyper-growth story, or is it becoming a cash machine? Apple went through this. Microsoft went through this. So the difference between them and Nvidia is that Nvidia is doing it at a 216 billion in annual revenue during the biggest tech build out in history. So, but don't get me wrong, like this wasn't a bad reaction. It was a signal. Nvidia delivered one of the best quarters any tech company has ever posted, and the stock barely moved. That tells you the market has already priced in the current AI boom. The next question investors care about is quite simple. So, is Nvidia about to enter another leg of exponential growth? Or is it entering a long phase of massive profit, slower growth, and cash distribution? Both, of course, are great for the company, but they are very different stories for the stock. And that's what Wall Street is watching next. Of course, we'll be tracking this very closely here on Roxom TV. Let's move on to the second piece of the news. Like, of course, we have to cover Donald Trump because he's never out of the headlines. So Donald Trump delivered his 2026 State of Union address last night, and it lasted 108 minutes. That makes it the longest State of Union speech on record, even breaking his own record from last year. So the speech covered almost every single thing. So he talked about the economy, tariffs, immigration, healthcare, Iran, the Maduro race, Supreme Court, and even a playful mention of a possible third term. This speech comes just 9 months before the midterm election, and at a time when his approval ratings on the economy has been slipping. So let's go through what Donald Trump talked about during this 108 minutes talk, and let's break it down into different sectors. Like, of course, the first sector we have to cover is the economy, because that is the main focus. Donald Trump said he inherited a stagnant economy and turned it into one that is roaring like never before. He promoted his tax cuts under what he calls the One Big Beautiful Bill. He highlighted no tax on tips, strong private sector job creation, lower gas prices, and made a very bold claim that tariff revenue could eventually replace the income tax entirely. But here's the context we all need to know. The US GDP grew 2.2% in 2025. That's lower than any year during Biden's term. The country is currently in a partial government shutdown, and grocery prices remain high for many families. Just 4 days before the speech, the Supreme Court struck down most of Donald Trump's global tariffs, saying they were illegal under emergency power law. Donald Trump addressed that directly. He called the ruling very unfortunate, very disappointing, and he said he was already reimposed tariffs under a different legal authority. A new 10% global tariff went into effect today, and he said he plans to raise it to 15%. Democrats applaud when he mentioned the Supreme Court ruling. The justice in the room did not react. One interesting detail is that Donald Trump did not mention China at all. That may because he is expected to visit Beijing next month and doesn't want to risk a trade deal. The second areas that we need to discuss is, of course, the healthcare sector, because Donald Trump absolutely attacked the Affordable Care Act, calling it one of the biggest rip-offs of our time. He promoted a new program called Trump RX. Basically is a self-pay prescription platform offering cash price on 43 drugs. So he said deals were negotiated with 16 drug companies, but fact checkers note that many of those drugs already have generic versions that cause it way less. He promised to protect Medicaid. However, the bill he signed last year includes over $900 billion in cuts to Medicaid over 10 years. He also promoted something called the Trump accounts, that these are tax-deferred saving accounts for children. So each child born between 2025 and 2028 would receive $1,000 Treasury contribution. He said about 3 million children have signed up so far. On housing, he signed an executive order banning large Wall Street firms from buying single-family homes in bulk. He asked Congress to make that ban permanent. So another sector we have to go over is, of course, immigration. Immigration took up most of the time in the speech. Donald Trump said border crossings are at record lows. He argued Congress to pass the Save America Act to prevent non-citizens from voting. Experts say non-citizen voter fraud is extremely rare. He told emotional crime stories tied to immigration. One case involved a Ukrainian refugee killed on a train. The victim's mother was present in their chamber. When Democrats did not stand during that moment, Donald Trump turned toward them and said, why don't you stand? How do you not stand to this? But what he did not mention is that, 2 US citizens shot by federal agents during immigration operations. So, as expected, having both the Democratic parties and also Republican Party in the same room, the atmosphere was extremely tense. Before Donald Trump began speaking, Congressman Al Green held up a sign reading, "Black people aren't apes." This referenced a social media post earlier this month. He was escorted out of the chamber to chants of USA. Later, Representative Omar shouted during a section on immigration enforcement. Other lawmakers also responded very vocally. Speaker Mike Johnson called the disruptions shameful. More than 30 Democratic lawmakers skipped the speech entirely. And Virginia governor delivered the democratic response. She accused Donald Trump of lying and offering no real solutions. She focused on affordability and criticized immigration enforcement. Senator Chuck Schumer called it state of delusion. A Senate Spanish language response was also delivered. So the bottom line for this talk, for this speech, like this was not just a State of Union, it was a campaign speech. Donald Trump doubled down on tariffs. He defended immigration enforcement. He attacked the Affordable Care Act. He promoted new programs like Trump RX and Trump Account. But the key issues like China, he never really talked about China at all. NATO, global allies were barely discussed. With midterms approaching, this speech kind of set the tone for what will likely be the very intense political year. Markets, of course, will be watching closely because policy direction, especially tariffs, could directly impact inflation, trade, and economic growth. We'll continue tracking how these policies translate into real economic data. So we'll take a short break for now, and when we come back, we will be diving into Meta's biggest comeback into the crypto area with stablecoins. So stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxom TV, and thanks for sticking around with us. We're now diving into the story of Meta quietly preparing a comeback in stablecoins. And yes, the same Meta that failed with Libra and Diem. So, like this time, the strategy is a little bit different. According to CoinDesk, Meta Platforms plans to integrate US dollar stablecoin payments as early as the second half of this year, if it can successfully partner with a third-party payments provider. That being said, so no more in-house coin, no Meta issue currency, no big announcement just yet. This is a much more careful move compared to before. So you may ask, like, what Meta is actually planning. So sources say Meta wants to add stablecoin payments across its apps, which include, of course, like Facebook, WhatsApp, Instagram. That's over 3 billion users globally. But instead of running everything itself, like they previously do, Meta plans to outsource the entire stablecoin system. So that would include the payment rails, compliance, and wallet infrastructure. Meta stays in the background. The goal is simple, which is to enable cheap, fast digital dollar payments without becoming a bank. So here's why Stripe matters here, because like during this conversation, one name just keep coming up, which is Stripe. And Stripe is seen as the top candidate to power Meta's stablecoin push. Like, why? I'm glad you asked. Because Stripe bought a stablecoin infrastructure company last year. Stripe already works closely with Meta, and the CEO joined Meta's board back in 2025, so last year. That makes Stripe a natural partner. If this happens, Meta doesn't launch a stablecoin. It simply turns on stablecoin payments inside its apps. So that's a huge difference here. So another question people like to ask is like, why Meta wants stablecoins so badly? Well, this is about payments, not crypto hype. Because like stablecoins, what it does is that it allows much cheaper cross-border payments, instant settlement, no bank delays, and much lower fees for creators and merchants. And for Meta, what it means, it translates to easier social commerce, better international remittance, and more control over payments inside its ecosystem. This could turn WhatsApp and Instagram into real payment platforms, not just chat apps. And Meta, of course, like it's not alone, because like a competition when it comes to stablecoin is keen. X, so Twitter, is building payments as well. Telegram is also pushing crypto tools. Everyone wants to become a so-called super app. Meta already tried this years ago, but failed very badly, mostly because of bad timing, in my opinion. So what changed now? This time is different from Diem, because back in 2019, Meta tried to launch its own global currency. Regulators panicked. Politicians pushed back hard. Trust was low after privacy scandals. The project collapsed, but today the environment looks very different. The US now has much clearer stablecoin rules. Stablecoins are widely used. Big institutions are very much involved. Most importantly, Meta learned its lesson. This time, they're not issuing the Meta coin. No control over money supply, no direct regulatory target. As one source would put it, like they want to do it, but keep that distance. So this matters because if Meta succeeds, this could be one of the biggest real-world users of stablecoins ever. No traders, no DeFi users, just everyday people, billions of them. It won't be loud, it won't be flashy, But if stablecoins quietly turn on inside Meta's apps, that's how mass adoption actually happens. So of course, we'll be watching this very closely here on Roxom TV. Moving on to the next piece of news I really need to cover is like another big news in the stablecoin space. So Hong Kong-based stablecoin, this company called RedotPay, is reportedly considering going public in the United States. According to Bloomberg, the company is aiming to raise more than $1 billion with a potential valuation up to $4 billion. That's a serious number for a stablecoin-focused payments firm. Talks are still ongoing, so nothing is final yet, but RedotPay is said to be working with major investment banks, including JP Morgan Chase, Goldman Sachs, and Jefferies to explore a possible listing in New York, possibly later this year. So why does this matter? Because RedotPay saw explosive growth back in last year. The company raised about $194 million last year, and its December funding round officially pushed it into the unicorn status. Its backers include well-known venture firms like SL, Blockchain Capital, and Pantera Capital. If this IPO goes through, it will show that stablecoin payment companies are now mature enough to access US public markets, not just crypto native exchanges. It also signals something much bigger, which is like stablecoins are increasingly being viewed as financial infrastructure, not just trading tools. And the bigger picture here, like this move also comes at a very interesting time. Hong Kong is trying to position itself as crypto hub. At the same time, mainland China has recently reinforced its ban on crypto trading and mining, and they have made it clear that unapproved yuan-linked stablecoins are not allowed. So if RedotPay lists in the US, it gives the company access to deeper capital markets, more global investor visibility, and possibly more regulatory clarity. So the bottom line here is, okay, if RedotPay successfully raised $1 billion in US IPO, that's another signal that stablecoins are moving deeper into mainstream finance. So of course, we'll be watching this very closely as the development goes. Moving on to the next piece of news, now we have another wide story at the intersection of creator economy, predictions market, and also regulation. Prediction market company Kalshi says it caught insider trading on its platform, and one of the people involved works for MrBeast himself. So Kalshi reviewed it punished 2 users for trading based on inside information. One of them was an editor working on MrBeast content, including the reality show Beast Games. This is one of the clearest insider trading case we have seen in prediction markets so far. So let's take a step back. What actually happened? According to Kalshi, the MrBeast employee used non-public information about what could happen in upcoming MrBeast content and placed trades on Kalshi based on that knowledge. The amount traded was only about $4,000. Kalshi says it detected the activity, investigated it, and took action. So what Kalshi did is that there was a 2-year ban from the platform and a fine of more than $20,000. Kalshi said like this violated its rule, which clearly banned trading on insider information. And as for how MrBeast, the company, respond, so the employee worked for Beast Industries, the MrBeast production company. In a statement, Beast Industries said it has 0 tolerance for this kind of behavior, whether by employees or contestants, and that it already has internal policy against using company information for personal gain. The company also said it has launched an independent investigation into the matter. So in short, the MrBeast company are saying that they're taking it very seriously. So Kalshi also disclosed another insider trading case at the same time. So in that case, a user named Kyle Langford placed bets on his own political race, betting on himself to win. That user received a 5-year ban and a penalty equal to 10 times the amount he traded. So Kalshi is clearly trying to show it enforces rules across the board, not just when celebrities are involved. So Kalshi, of course, is trying to be legit. It's not just a website trying to be a regulated exchange because it's licensed by the CFTC. After Kalshi announced its penalties, the CFTC issued an advisory saying, so what they claim is that these cases may violate US law. Exchanges like Kalshi are the first line of defense against insider trading. The CFTC chair publicly praised Kalshi for the action of the enforcement and warned that anyone attempting manipulation or this story isn't really about MrBeast. It's about whether prediction markets can scale without becoming insider trading nightmares, because we kind of have seen the same case going on in poly market. These markets, so prediction markets, would let people bet on elections, so politics, sports, culture, crypto, even climate, and mentions. But like once people with inside access start trading, the whole system would break. That's the same reaction. Insider trading is illegal in stock markets. And this case shows how hard it is to draw the line, especially when information spreads fast and content is produced behind closed doors. So key takeaway for this news, like prediction market, of course, like growing at a rapid pace, but growth brings risk. This case set an early precedent, like platforms will monitor trades, bans and fines are real, and regulators expect exchanges to sell policy aggressively. And prediction markets are starting to be treated like real financial markets with real rules, real enforcement, and real consequences. And that's exactly why these stories matter so much. So we'll be watching this space very closely, but let's take a short break for now, because when we come back, we are diving into the Bitcoin world. There is a mystery going on crypto Twitter. That seems to be like a 10 a.m. sell-off for Bitcoin's price. So after the break, we'll break it down and see if there's any truth to it. Stay with us.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin?
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxom TV, and thanks for sticking around with us. We're now diving into the world of Bitcoin, and there happened to be a new theory circulating in the crypto circle. So some analysts are simply asking this question: why does Bitcoin keep dropping almost every single day around 10 a.m. Eastern Time? And why does it feel algorithmic and precise and very coordinated? Now, a new federal lawsuit in Manhattan has added fuel to that fire, and one name just keep coming up, and that happened to be Jane Street Capital. So let's break this down calmly and clearly. So first, to understand what's going on, we need to have a little background. So first of all, the former intern named Bryce Pratt worked at Terraform Labs, so which is the company behind Terra USD and Luna. He later joined Jane Street. According to a new lawsuit filed by Terraform's bankruptcy estate, Jane Street allegedly gained access to non-public information about Terra's liquidity moves through a private chat group called Bryce Secret. So the key moment here is actually back in 2022, so back in May 2022. Terraform withdrew $150 million of UST liquidity from Curve, a major trading pool, and less than 10 minutes later, a wallet allegedly linked to Jane Street withdrew $85 million from the same pool. Soon after, UST lost its dollar peg. The Luna ecosystem collapsed, and the rest is history. $40 billion in value was wiped out. The lawsuit claims Jane Street exited positions just hours before the collapse, avoiding more than $200 million in losses. Jane Street also strongly denies the allegations, of course, and called the lawsuit baseless. One important note is these are still allegations. Nothing has been proven in court, but the case reopened questions about institutional behavior during that crash. And then let's fast forward to 2024 and 2025. Bitcoin traders started noticing something very strange. Almost every trading day around 10 a.m. Eastern Time, when US stock markets open, Bitcoin would suddenly drop, like not randomly, but very sharply. We're talking about quick 2 to 3% drops. Leverage gets liquidated, long positions wiped out, then price stabilize or rebounds later. Glassnode co-founders documented this behavior, this pattern. Charts show repeated a 10 a.m. sell-off, sometimes triggering over $150 million in liquidations in just a minute we're talking about. And this happened for months. Then something interesting occurred. When the tariff reform lawsuit became public, the 10 a.m. pattern briefly stopped. Bitcoin trading stabilized. Later, the pattern reportedly resumed. Some analysts believe this timing is really suspicious, and others say it could just be liquidity dynamics around the ETF flows. There's no formal proof of manipulation, but the pattern does really raise eyebrows. And the third part, we have to break it down. It's like, here's where market structure becomes very important. Jane Street is also one of the only few firms allowed to directly create and redeem shares for major Bitcoin ETFs like BlackRock's IBIT. That row is something called authorized participant. It gives direct access to the mechanism that links ETF shares to actual Bitcoin. So what that means is that Jane Street can move Bitcoin in and out of ETF structures. They can have the arbitrage price difference. They can benefit a little bit from that, and they can provide liquidity, execute large trades quickly. Jane Street disclosed holding around $790 million worth of IBIT shares in recent filings. At one point, that exposure reportedly approached $2.5 billion. They also increased holdings in MicroStrategy stock. To some people, this looks bullish, of course, but experienced traders say something very important. So the 13F filings only show long stock positions. They do not show options, futures, swaps, or short hedges. So it's possible, like not confirmed, that the visible long position could be offset by derivatives. What this means in simple terms is that they might appear long on paper, but could be hedged or even net short behind the scenes. That part is not publicly disclosed, of course. And then the fourth part, we really have to break it down. Like, why does this matter for Bitcoin? And why does this matter for you and I, right? So Bitcoin supply is capped at 21 million coins. We all know that. That scarcity only matters if price discovery is fair. If large institutions can use ETF inventory, layer derivatives on top, create synthetic exposure, and basically push price during thin liquidity windows up or down, then the market can behave very differently from simple supply and demand theory. Again, this is structural speculation. There's no official ruling saying this is happening. In fact, if you go to crypto Twitter, there's a debate going on. Some people think this is actually not possible, yet like some analysts say it is, like this just a dark truth of Bitcoin. So the debate is very much going. But like, okay, let's go back to Jane Street. Like Jane Street has also faced scrutiny elsewhere. In 2025, India's market regulator accused Jane Street of manipulating index options in the bank Nifty market. The regulator claimed coordinated trading in cash and derivatives market generated billions in profit. Jane Street disputes aspects of those claims, but the case shows regulators are willing to examine complex trading strategies. So the question many Bitcoin holders are asking right now is like, could similar high-frequency derivative-based strategies impact the crypto market, impact the Bitcoin price? So I would say so there's a balanced conclusion. Like this is currently no proven court ruling that Jane Street is suppressing Bitcoin. There is a federal lawsuit involving terror. We know that. There's a documented 10 a.m. trading pattern, a large ETF market maker with deep assets and basically unanswered questions about derivatives exposure, Bitcoin's protocol is fixed, but its price is determined in financial markets. And financial markets can be very complex. The real issue may not be one company. It may be about transparency and ETF flows are visible, swap prices are visible, but derivatives hedge are not. And that gap creates uncertainty. So the bottom line, when you're going through this news, like, okay, if you believe markets are efficient, then this is just noise. If you believe structure matters, this is worth watching closely. What we know for sure is that Bitcoin volatility is not random. Institutional access has changed market behavior, and price discovery today is very different from 2017. The big question going forward is this just liquidity mechanics or something deeper in market structure? Of course, we'll continue to monitor the developments here on Roxom TV. So speaking of Bitcoin, let's do a quick price analysis before we end the show. So Bitcoin right now is sitting at $68,000. And let's go ahead and close the indicators here because there's too many lines. So for the past 2 days, it has been like we were in a joyful rally, like everyone is saying, okay, very optimistic. So if we take the bottom to the top, so we rally to 69 or close to $70,000. So that was a really generous, like more than 9% pump in 2 days. I mean, not gonna lie, it looks really good. Well, however, I hate to break it to you, since we're doing price analysis every single day, what we have done here on Roxom TV is that, okay, first of all, we spotted the bear flag. Of course, this is a bearish pattern. And second of all, this is still the descending triangle that we talked about that days ago. And this pattern, again, like two bearish patterns forming. And if we zoom closer, well, we are just eventually building up that momentum, squeezing inside that triangle. That means, it's not like very bullish setup in my opinion. And the more we stay in this triangle, like the more powerful like the momentum it gets. Because like think of it like pulling a string. So if you keep pulling and the further you pull, the more power is stored. So basically building inside this descending triangle is not a good sign. That means we are heading to lower places. But like I'm seeing a lot of comments that Bitcoin bottom is near. Well, based on the charts that I'm seeing, it okay, define near. Like do you call the maybe in the next half a year, do you think that is near or still long term? So I don't know what's the definition for the analysts out there saying is near, but like according to the 4-year cycle, some people find it ridiculous, but like so far it has been working really well in our favor. So according to the 4-year cycle, if we hop onto the weekly, that means we're going to get the cycle bottom around October 2026, so 5th of October 2026. So in other words, there are still lower places to go. Like if we pull out the EMA, so the first top line here, we have the 50-week EMA, the bottom one is the 200-week EMA. And if we zoom closer, okay, so the 200-week moving average right now sitting at $68,000. Like in other words, we are using the 200-week as a resistance instead of support. That is bearishness, weakness number 3 that I spotted. And right now, since we zoom out to the weekly chart, weekly candles, that means we are using more like a long-term mentality to do this analysis. So I do not think the bottom is near, like define near, okay? If you think October, that means, okay, maybe half a year to come, do you think that's near? I don't know. Like, I don't know the definition, but like according to the 4-year cycle, bottom is going to be around October this year. And how low can we go? Like, I did a very interesting interview with Lark, like Lark, of course, being one of the best crypto YouTubers out there. And during the conversation, I learned so much from him. So I highly advise you, if you haven't checked that out yet, please go back to the yesterday's show to check out. I'm sure you're going to learn a thing or two. So like, Lark brought up a really good point. So if we take the top of 126K all-time high of Bitcoin, and if we take the low of like 60K, that is a 52% correction, 52% drop. So according to any previous bear market, if we do November 2021, and if we do take the bottom, so usually bottom form in a year, so that will bring us another like November 2022. So that was like a downward movement for an entire year. So if we focus on the percentage wise, it dropped 77% from the cycle top from its previous all-time high. And right now, we have already dropped 50, like more than 50%. So the point that Lark was saying is that, okay, we have dropped so much already. Like, no one would predict the bottom beautifully well because no one has a crystal ball. Even Warren Buffett, he doesn't know about tomorrow's stock, S&P, what the price is going to be. All right, so the point being, the risk and reward is making sense. Like entering Bitcoin or slowly DCing right now is like at a fair price. It's not like crazy expensive. So that is a really good point that he brought up during the show. And then another thing I want to mention is that, why I do not think the bottom is in just yet. Okay, first is 4-year cycle. Second is that, when we drop below the, actually, let's do it this way. So when we zoom out and look at the previous bear market that we had, we visited, back in 2018, December 2018, we dropped to the 200-week moving average, and then we touched again, but here it was during COVID, so I don't really, it's more like a deviation. I don't really count this as a standalone bear market. But back in December 2018, when we lost the 50-week at the top, we go to the 200-week. And if we look at the previous bear cycle, back in 2022, first we lost the 50-week, and then we touched the 200-week, and then we even went below the 200-week, like way below. If we zoom closer, if we zoom closer to how low we went in the previous bear market, so we lost the 50-week, and then we find the bottom at 15.5K, somewhere around that. So that is another 65% correction, downward movement. Like, if you ask me, can we go 65% below the, what was that, the 50-week moving average? Like, if so, that would take us to this 36K, like 30-ish K region for Bitcoin. Like, I'm not saying nothing is impossible in the Bitcoin world, right? But like, if we go back to the one day cycle, so 1 day time frame, I talk about this extensively again because like we talk about this bear flag forming, and just a rough measurement, really rough estimation. If we take the length of the bear flag, and then if we go to the breakout point, that will bring us to 50, 56, 57K. So that's why I got a buy order around that level. But we will take it from there. And usually, because one thing, another reason why I do not think this is a cycle bottom, because this was a very severe drop in a really rapid, fast period of time. From a technical standpoint, if something dropped this much, this quickly, usually the cycle bottom, the ultimate bottom, is not in yet. So anyways, going back to Lark, what he said, I agree with him. no one would know the exact bottom, but like if you slowly DCA, because like bear market is when you build the generation wealth. That's not in bull market because like bull market everything's so expensive. But like even right now, I was saying, okay, maybe Bitcoin there's further to go, maybe drop another 30%, but okay, it already dropped 50% already. So like, what's another 30%? And not to mention, no one could call the bottom beautifully. We only know that in hindsight. So yeah, that is the quick price analysis. Let's move on to the last piece of news. I want to talk about MicroStrategy MSTR a little bit because like it's making headlines, but not in a good way. Like this is a very interesting trade on Wall Street right now. MicroStrategy, the company formerly known as Strategy, company formerly known as MicroStrategy, is now the most shortest stock in the world, among companies worth more than $25 billion. So about 14% of this $41 billion market value has been sold short. This is huge. And yet today, the stock is up about 8%, thanks to Bitcoin rallying near like 6 to 7%. So how can a stock be heavily shorted and still go up? That's the real story we have to cover here. So basically, MicroStrategy is not like a normal company anymore. It trades like Bitcoin with leverage. Under executive chairman, so Michael Saylor himself, MicroStrategy has turned itself into a corporate Bitcoin holding vehicle. The company now holds 717,000 BTC. That makes it the largest corporate Bitcoin holder in the whole world. These coins were purchased using convertible bonds, equity offerings, and some operating cash flow. But like, so here's the math. When Bitcoin goes up, strategy stock, of course, like it goes up even more because it's on leverage, it's on steroid, right? When Bitcoin falls, MicroStrategy would fall even harder. That is the leverage effect. So it goes both ways. It's like a double-edged sword. And you may see headlines saying MicroStrategy has about like $7 billion in unrealized loss. Like the important words I need to mention here is unrealized, because like they have not sold the BTC. The losses are based on mark-to-market accounting, meaning the balance sheet reflects current market prices, but markets don't just look at today's price. What they look at is the debt levels, asset coverage, refinancing risk. When Bitcoin drops, strategy's leverage looks more dangerous. That's why the stock is so volatile. So why? Another question people like to ask is like, why Wall Street is shorting this so heavily? And this is where it gets interesting. Not all shorts are betting on collapse. Many funds are running something called a basis trade. Here's how it works in simple terms. So buy Bitcoin directly, often through ETFs like IBIT, and they would short strategy stock at the same time. We talked about this earlier in Jane Street. Like this is a very common strategy because like sometimes strategy trades at a premium or discount relative to Bitcoin, to the Bitcoin it holds. So funds would try to profit from that difference. So a big short position doesn't always mean hedge funds think Bitcoin is going to zero. It often means they are trading the price gaps. Even trading firms like Jane Street have disclosed large positions across Bitcoin ETFs and strategy shares. That suggests structure and pair strategies, not pure bearish bet. So MicroStrategy, as he disclosed, like they are still buying Bitcoin. Strategy is not slowing down. Just earlier this week, the company announces 100 Bitcoin purchase since 2020. So they bought more than 500 or close to 600 BTC for about $39 million at an average price of roughly $67,000. They funded this by selling about 297,000 new shares. With that purchase, Strategy now holds 717,000 BTC, total acquisition cost of $54 billion, and average cost per Bitcoin is about 76,000. Like that means that current price, they're still below the average cost and they're still accumulating. If Bitcoin trends higher, Strategy could squeeze hard. If Bitcoin weakens, leverage becomes the risk. So either way, MSTR is no longer just a software company. It's very much a macro Bitcoin instrument sitting inside the public equity market. And that's why traders are watching it very closely right now. So that's pretty much all the news I want to cover in today's show. Before we go, make sure to give us a follow on X, on Twitter. So my personal Twitter is jamjancrypto_io. Make sure to follow Roxom TV as well, because we always have valuable content. We are posting basically on an hourly basis about global news, about Bitcoin, about AI. So point being, there's so much valuable content, so much you can take away from Roxom TV X, Roxom TV Twitter. So do give us a follow. And as for my show is from Monday to Friday, 3 a.m. Eastern Time. Thank you guys for watching, and I'll see